Hey everyone, it's Trenice from TKO Taxes and welcome to day 9 of Taxmas. In our previous video, we talked about the difference between a credit and a deduction for tax purposes, and we also talked about how the IRS uses what's called marginal percentage rates in order to figure out the actual tax bill amount. So today I want to show you those marginal rates for the tax year 2024, and we'll do an example of a tax bill and how it's configured using those percentage rates. Okay. So here are the marginal percentage rates that are going to be used to configure your 2024 federal tax bill. If you take a look at our chart, I know it's a little confusing, but we're going to go over a simple example to help you understand it just a little bit better. Let's say that for the 2024 tax year, you had a total income of $46,900 and you have a head of household filing status. Looking at our chart, head of household filing status will get you a standard deduction of $21,900. If you subtract $21,900 from $46,900, you're going to get a taxable income of $25,000. Looking over at our chart, the first $11,600 of that is going to be taxed at 10%. And 11,600 times 10% is $1,160. So, how much of that $25,000 taxable income is left after subtracting the 11,600? Well, 25,000 minus 11,600 is 13,400, and that is the remainder of income that needs to be taxed. So if we look at our chart, we already taxed 11,600 of your income at 10%, from $11,601 all the way up to $47,150 with a filing status of head of household. Percentage rate is going to be 12%. So that $13,400 is taxed at 12%. And $13,400 times 12% is $1,608. So your $1,160 from the 10% that we taxed and the $1,608 from the 12% that we taxed is added together to configure your tax bill, which equals $2,768. And that is how the IRS configures your tax bill. After your tax bill is configured, other things come into play to help lower your overall tax bill amount. Things such as, how much did you pay out in federal income taxes from your paychecks during the year? And since you are a head of household filing status, then credits such as the child tax credit are applied to then lower your tax bill even more. And remember, some credits are refundable. So once the credits are applied to your bill, if your bill falls below zero, meaning that you have a negative amount, then a refund will come back to you for the remainder of the credits. I hope you have a better understanding of how the marginal percentage rates work and how they are applied to your tax bill. Remember, you can always check out the irs.gov website for more information regarding marginal percentage rates, and of course, I'll leave a link below in the very first comment of this video. Again, my name is Trenice from TKO Taxes. Check out tkotaxes.org, and I'll see you in the next video for tip number 10 as we continue TKO's 12 Days of Taxmas.